I did talk about open market operations, isn't it? But a few things I have in my notes which I forgot to tell you. There are two kinds of government securities that are around in the Indian economy. One kind of government security are treasury bills, money market instruments. 91-day bill, 182-day, 365-day bill, this kind of a thing, 364. This. These are within 1 year period maturity. These are real money market instruments, but there are some other other government bills which are called government dated securities. You will find that in Professor Bhole's book, there is a description of government dated securities. These are the long term securities. All right? These are like government bonds. These are like government bonds. Now, when open market operations are carried out by the Reserve Bank of India, the open market operations are done with the economy. It can be banks, non-banks, public, whoever holds securities. I think they are primarily with respect to government dated securities, not the typical money market instruments, which are treasury bills. These open market operations are primarily with respect to government dated security. And if that is true, then you can imagine that it's a game between two parties, the RBI and the banks and whoever hold them. So, it's a cash flow, and it can be interpreted as managing monetary policy, because monetary policy would say, now reduce the money supply in the economy. How would you do that? You go for sale of government dated securities. So, Reserve Bank has to have a stockpile of government dated securities. So, when it wants, it can go for a sale of securities, squeeze out liquidity from the system. On the other hand, RBI decides now increase liquidity in the system on a permanent basis, not very short term. So, it can go for a purchase of government securities. Now, there is a criticism that open market operations, which are in monetary theory known as the traditional monetary policy instruments, in India, however, they have been used to manage government debt and not so much as a monetary policy instrument. So, when Reserve Bank has typically gone for sale of government dated securities, is because government needs the money. It is not RBI wants to conduct a monetary policy. Government needs the money, RBI has no choice, being the banker to the government, it will sell government dated securities. All right? Okay. So, we need to check the data as to find out what kind of sell and purchase have gone through in the last maybe 4 years or so, 5 years. So, monetary policy instrument means RBI as the central bank thinks now money supply need to be reduced, now money supply need to be increased, and it will go for open market operations. But there is a criticism that open market operations in India have not been used as monetary policy instrument, rather they have been carried out to finance government expenditure. So, open market operations are typically managing government debt, which government is borrowing from the economy. Okay? All right. I forgot to mention that. So, these long term securities, there can be all kinds of data available. I have seen data is available, the yield curve, yield to maturity in a long term curve in that polynomial, the denominator 1 plus I square, you can get the I value, and I value would change from time to time as the maturity of the bond changes. It was initially 10-year, new bond, then it becomes 8 years old or 2 years old and 3 years old. So, remaining 7 years, remaining only 6 years, the secondary market opens for these bonds, the buying selling going on, the yield keeps on varying, changing, the price of the bonds keep on changing. So, you get the yield curves for government dated securities and all sorts of data you can get. And I have some data which we need to study later when I would get the data for this topic. I have a note here which is very interesting, that this is about 3-4 years back, no, about 6 years back. 6 years back, if you look at the open market operation data, you would have seen that open market purchase have been done from the market. So, open market purchase में क्या होता है? Open market purchase of securities means you are pumping in money, injecting funds. You are purchasing securities from you and me. Central bank is purchasing them, means giving you cash. So, pumping in cash into the system has been mostly with the market, and open market sale of securities when government is borrowing money through their bonds, etc., and RBI doing that, open market sale of securities to you and him and banks and non-banks and companies have been primarily with respect to state governments. Very interesting. Open market sale has been primarily with respect to state governments. Open market purchase of securities have been from the market. Very interesting. So, they mean something, what I am trying to say. It has very specific meaning there, significance there. All right. So, we will check the data later. Finally, I came to the last point of traditional functions, exchange control authority. Central bank of a country has the most important responsibility with respect to the exchange rate of any country. So, whenever it requires an intervention, like the market is determining price, so demand curve, supply curve shifting back and forth, and there is a price jumping up and down, call that exchange rate, it's happening. And if that price jump up and down is too volatile, too unstable, too much of something which you dislike, not liked, like too high a price we don't like, for instance, of goods, then interventions are required. How are interventions happening? Interventions happening through the demand and the supply curve. Artificially, you inject something, all right. Say you inject foreign exchange into the system, so the supply curve will shift and bring the price down. So, who does that? This controlling from outside a free market by artificially injecting supply or artificially creating a demand when it is too low, none of them is good for a country. In fact, if you learn macroeconomics, you will see none of them are good for a low. A low exchange rate is not good. That means 40 rupees per dollar is not good. A very high rate right now, 52, 53 rupees per dollar is also not good. Somewhere in between, a moderate exchange rate is good. Now, this is something which macroeconomics teaches you. Simple reason is a very high exchange rate value right now, where the Indian currency is very cheap, because 52 rupees would mean that it will facilitate maybe exports, depends how much, what kind of goods you export, of course, but it is definitely very damaging for imports, because it's very costly, a dollar. So, the import bill goes up in terms of Indian rupee. So, it's very, very costly. So, it's not good. Similarly, a very low value of E, that is an appreciated value of E, which is called appreciated value of E, is not good either, because then every dollar fetches very little Indian rupee. So, Indian goods are very costly in terms of dollar. So, exports, it does not help exports, but importers are very happy. So, in one hand, exporters are not happy, importers are. On the other hand, importers are not happy, exporters are. So, therefore, a high value and a low value. So, the question is, what is the critical value? So, usually what countries do, they set a band against an exchange rate, within which E value fluctuation is good. Beyond that, either above or below is very bad news. So, you require intervention. Who does the intervention? RBI or the central bank does the intervention. Earlier, we used to have fixed exchange rate systems where E was kept fixed. So, any fluctuation is not possible, and RBI was controlling the entire exchange rate market. Now, we have a more flexible exchange rate system, where like a free market, demand and supply shifts, they change, but RBI keeps a watch on that. So, exchange rate interventions are of course one of the important tasks, in addition to keeping exchange rate reserves, which you know they have to the main reserve centers of exchange rate, the central bank. Although private dealers are allowed, In India also private dealers are allowed, other than public sector banks and central bank. But also another thing they are doing as Exchange Control Authority is that when they do acquire a lot of dollar, is it good the dollar to sit there idle? Here comes the second round of activities. Is it good for a country or a central bank that when they earn dollar, let that sit in a vault? No. So they have to look for appropriate investment policies. As a central bank of a country looking for investment policies, very interesting. So where do they go and invest dollar? Of course, in the international market. So there you go, central bank of a country acting like a company, a business company, a finance business company, trying to make money on dollar. And they go hunting for suitable investments in the foreign market. So this kind of a thing that goes on, investing dollar, etc., they go at, what is China doing? China is investing in US treasury bills, the dollar returns. And US, it's benefiting US is allowing it because the US doesn't have enough dollar. And dollar is a key currency. It's circulating all over the world. So China has a very interesting investment. Europe recently asked for Chinese investment in European Central Bank. Recently, very recently asked that. So go and buy things. Acha. So central bank starts operating like a commercial entity. Very interesting. They look for investment avenues in the foreign market. Okay. They go and give money to the World Bank also. Sometimes the money is returned with interest. They contribute also to World Bank, IMF. And they have created, Government of India has created some bonds, very interesting, which under called Market Stabilization Scheme, they have created some special bonds to mop up excess liquidity, because what is happening with the exchange rate is that when the exchange rate is coming, the exchange rate go and sits in the exchange rate dealers. The famous dealer is RBI itself and private dealers or whatever. But the country gets flooded with Indian currency because exchange rate dollar ला के तो आप कोई दुकान में जाके खरीद नहीं पाएंगे. You have to exchange the dollar to rupee. So the country gets continuously injected by liquidity. So recently, Government of India has floated because of this, and RBI, they have involved RBI, but RBI said, look, we are going to help you. This is called Market Stabilization Scheme, MSS. You will get an RBI balance sheet, the data. Market Stabilization Scheme is essentially what they are doing. Government of India is selling bonds to mop up that liquidity. When they are selling bonds like open market operations, sale of bonds, the liquidity goes to Government of India, and Government of India is happy financing it, but it creates a fiscal problem because tomorrow you will have to return the money with interest. And RBI has told very categorically, I know, Government of India, told Government of India, okay, we would help you to sell those bonds, Market Stabilization Scheme bonds, but the fiscal responsibility will be on you, not us, about returning the money and paying the interest. It's nice to have money today if you don't have, but if you're borrowing it, you have to keep in mind you are creating a public debt or a debt, private debt, whatever. In case of government, it's government debt, public debt. So you have to return the money tomorrow. So in connection with Exchange Control Authority, RBI from time to time predicts inflow of dollar or outflow of dollar and reports that to the government, and government gets ready with Market Stabilization Scheme bonds to mop up the excess liquidity if it is coming in. Okay. This more or less sums up the traditional functions of our central bank. This kind of functions more or less are similar across the world, across the countries. Now I come to the non-traditional functions which are not typical of central banks of other countries, like the Federal Reserve Bank in the United States, or Bank of England in England, or Bank of Canada in Canada, or Bank of Italy in Italy. It's not. So let me take up today, having concluded the traditional functions, the non-traditional functions. non-traditional functions. I see here two kinds of non-traditional functions I mentioned, and then I will come to three. I mentioned three non-traditional functions. First, supervisory functions. This may or may not be there in other countries. Some of that may be there. It is not exactly non-traditional, but the government of India, Central Bank of India does a lot more, which is good in some sense. It may not be very effective, but it does. These are essentially two institutions within RBI which are involved with supervisory functions. Like you are writing a PhD thesis, I am supervising, or I am working in a shop floor of a company and there is a supervisor supervising the work, whether it is done properly, the way it should be done. So, you understand supervisory functions, what kind of activities are involved here. Essentially in India, what happens is the RBI has a department of supervision, like there is a banking department, issue department. I told you RBI has various departments like IIT Kanpur. I mentioned that at some point. So, RBI has a department of supervision, and there is also a board of financial supervision. There is a board consisting of members. So, they have a department of supervision and board of financial supervision who does the following things. Some of that may be common across countries, some of that may not be common across countries. For instance, you want to open a bank tomorrow. You become rich, like Narayan Murthy has so much money, he wants to open a bank. He invites share capital, puts in own capital, share capital. Bank are companies, corporate companies essentially, remember, they have share capital, that is how it starts. They have a paid up capital in the constitution. Okay. So, can he open the bank? Well, it requires all sorts of regulations. So, a license has to be given. I want to open a company, a license has to be obtained, all right, registration has to be done. So, in case of banks, RBI is the licensing authority. This is a supervisory function, comes under supervisory functions. It has to specify the paid up capital the bank should have, that is the share capital, how much it can have, how much reserves it should have, should maintain, all right, various kinds of company related issues. Okay. Then we talk about CRR, that is every commercial bank, particularly scheduled commercial bank, should keep a CRR money, but a bank may be cheating on RBI, does not show the deposits, does not keep the CRR money. Okay. Who need to make sure that the CRR is maintained? RBI itself does that, there is no other authority. Okay. There is a department of supervision which essentially does it. Now, periodically they also inspect working of banks, just not in India. There is a state bank in Canada, I remember, a branch. So, they would inspect Indian banks abroad and Indian banks within India, of course, how they are working. And every guidance, or sometimes in the form of a permission, if not a license, permission, a bank wants to open more branches. Can it open? It will have to seek permission from RBI. All right? Okay. Then a bank should have expert or rather the required expertise among its personnel. So, who makes sure that the personnel is properly trained or not? RBI will have to make sure that the cashier has the right skills to manage cash, all right. The personnel manager is properly skilled to handle personal banking, your and my banking. The manager of a bank should have the skills to decide on the loans, etc., which he does. So, there are various kinds of skills that are required to manage a bank, to run a bank, for which training is often organized, training centers are open and training is imparted by the central bank. So, the central bank in India has a lot of things to do, just not opening branch, but also manpower planning, training, etc. What is manpower planning? A bank, what kind of people it should hire. Okay. Then a famous thing, which I don't know how much RBI has been effective, I wish to do sometimes, I haven't done that, because I haven't come across too much of a problem. Suppose there is an irregularity. Today the big thing about corruption going on in India. Suppose there is an irregularity. I had money in my account, it has disappeared. Where has it gone? Whom do you complain to? You can file an FIR if you wish with the police station, but essentially the central bank of our country, RBI, has office where you can go and complain what has happened. And they are supposed to do the policing job. If something happens with the bank tomorrow, you have to file irregularities or complaints with the RBI. RBI has cell to deal with, like a vigilance cell, and it will look into the matter. I have been told RBI functions very well. So you can do that. Okay. Then a famous thing about bank is what? Bank deals with public money. So if a bank mismanages public money because it gives too much of a loan, too much of a bad loan, which are not returned, which become what you call non-performing assets, and if all those things happen, if with a private bank, with a bank, either a public sector bank or any bank under its supervision, central bank supervision, then the question is it giving out the right kind of loans? Then banks also can invest. Are they investing the right kind of securities, right kind of areas? For instance, banks cannot invest in share market. For simple reason, share markets are risky investments, speculative investments. You may get a return, may not get a return. You may lose money. So banks are completely forbidden from investing in share markets. But banks can invest in the paid up capital of another bank. They do that often. That is also risky because the bank may not run, but that often they do, because probably RBI gives a guideline, please help out, tells State Bank of India, please help out another bank which is under our scheme by providing some share capital. So you buy some shares, maybe 10% of its shares, because SBI is flush with funds. But it cannot ask probably all commercial banks to do that, because all of them may not be doing well. But in general, a bank may be helping a bank in buying a paid up capital, some shares, but banks cannot go and freely, like you and me or a company, cannot go freely and invest in the stock market. Because that is speculative investment, capital market investment, open-ended. That is dangerous. So RBI makes sure that the banks follow these norms. Supervisory work, policing job essentially. रात में वो सिक्योरिटी घूमते हैं, सुना है, एक डंडा लेके खटखट आवाज़ करते करते, लेकिन उस सुन के चोर भाग जाते हैं. आवाज़ ना करे तो चोर नहीं भाग पाएंगे, वो इतना आवाज़ करते हैं, चोर क्या आदमी जग भी जाते हैं. लेकिन RBI का काम है उससे जाके दरवाजा में खटखटाना, unannounced visit, check the accounts, what kind of investments they are doing. Usually they have prior information that somebody is doing something wrong, then when they do. And some routine jobs are routine jobs. So RBI knows this bank functions properly, the bank also knows we are in the good books of RBI. They tell each other, okay, tomorrow there is a formality, I am sending somebody, he will fill out some forms, we will help him. All right, I know you are doing all right, we got your all financial statements, accounts, etc. We have checked them, but some information has come about some bank, koi manager गड़बड़ कर रहा है, कि our senior bosses. In India, banks corruptions have been with senior bosses also, just not the manager at a branch level, head office level. Harshad Mehta case 1990s was at the senior level, it happened. They all colluded. हो गया RBI का, रात का नींद आराम. क्योंकि public money they are dealing with, and anything goes wrong, major thing goes wrong, is the people who would lose their money, because they have their accounts there. They don't know, they are sleeping very well at night, thinking our रुपया जो सेव किया सब तो बैंक में है, शांति है. शांति नहीं है, काफ़ी अशांति चल रहा है, लेकिन इन लोग को पता नहीं है. So who is going to help them? It's a pretty risky business, banking business. An enormous amount of responsibility is associated with it. Enormous. It's much more than having a company, because a company you are obligated only to the shareholders and your employees. That's it. But in a bank, it's hundreds and lakhs of depositors whom you don't know even personally. They come once in a while, withdraw some cash, you see them, you even don't know them. And then you have 20 branches or 50 branches, only the branch people would know some of them locally. So, it's quite an important task it has, supervisory function. It lays out, in Professor Bhole's book you will find them, the supervisory functions. Then you know the selection process of the bosses, like at IIT Kanpur, say the deans or the directors and the deputy directors or whatever, the top administrative bosses. RBI is always involved in the selection of the chairman, CEO, whatever. Not the manager at the branch level, that is done internally, but the head office wala. RBI is involved. RBI sends its people on the selection board. It's compulsory probably by law. So, you have your people whom you invite as experts in the interview panel. In addition, RBI people also sits there. It's a must. Okay. And the one I was trying to encourage her to look into, which we don't have much information, is that the money market is just not banks in India. The money market also has non-banks. Now, what is happening with the non-banks? They are dealing with a lot of public money often, isn't it? These cheat funds, finance companies, ICICI, IDBI, they have these bonds, flexi bond, mutual funds. Where is the money? Public money. What is RBI regulation on them? So, this is something we need to check. I don't have much information, but I know RBI is very much worried and very concerned about regulation of the non-banks, because since liberalization policies were floated in the early 90s, the non-banks have expanded enormously in the monetary sector. Huge amount of non-banks are there. Their business has exploded. So many non-banks advertise on TV these days, so many. Okay? All right. Earlier in newspapers, we used to see only a few non-bank advertisements, maybe LIC, maybe UTI once in a while, nobody else. न्यूज़पेपर जब जमाना था, टीवी जमाना नहीं था, हम तो दिखाई नहीं नॉन बैंक एडवर्टीजमेंट. स्टेट बैंक एडवर्टीजमेंट आते थे, हमको पता है. जब नौकरी के लिए एडवर्टाइज करते थे, व्हेन दे आर हायरिंग, आई रिमेंबर स्टेट बैंक यूज्ड टू पब्लिश अ बिग ad in the newspaper. That's where people used to get information. State Bank is hiring or some other bank is hiring. Not really, not on a regular basis, but these days TV culture, they add ads all the time, you know, from these companies. So that is a very important issue. I am not going to touch upon much. How much are they controlling the non-banks? That's a research issue, in fact. That's a very investigative issue. I want it to investigate how much they have expanded and how much RBI is controlling them. Then I come to the promotional functions. This is typical of RBI and it is not typical of other countries. This is more of a non-traditional function. If you think supervisory function, sir, ये तो अलग देश में भी है, थोड़ा-थोड़ा है, सही है. इतना ना हो, कुछ तो है. लेकिन what we have is a very, the core of our non-traditional functions that RBI performs, which other central banks don't, are the promotional functions. Now, the promotional functions, as you understand from the word promote, means you are promoting something, you are trying to encourage and develop something, it is true, it is connected with developmental activities. Now, here comes this very important part of Indian banking that we were taught as a student, and it used to get very boring because page after page of detailed promotional activities we were supposed to learn when we were students, college students. But I will tell you a little bit about what it is all about. The promotional functions are essentially developmental functions. That means the country's development, particularly being a third world country or developing country, development requires non-typical, atypical banking activities. Banks are profit maximizing organizations, remember, like a micro theory, firm maximizes profit. But if banks are always firm maximizing profit attitude, if they have, then they will not find developmental activities or promotional activities very encouraging, because they cannot maximize profit there. Suppose I say RBI takes up a job because Government of India has an objective to help marginal farmers of Uttar Pradesh, because there is a drought, not doing well, help the marginal farmers of Uttar Pradesh, their crop has failed, with extra money next season, during the sowing season, extra money for fertilizers, seeds, etc., water and other capital requirements. Banks would say the whole group of farmers, say in eastern Uttar Pradesh or western Uttar Pradesh, the crop has failed, now you are asking me to lend them, how will they return the money? Because they are already living on borrowed money locally from private money lenders, from friends, relatives, because crop has failed, how are they eating? Where are they getting the income to eat? Now, during the next harvest season or sowing season, you are asking me to lend them, that money if they earn, even if it is successful, if they earn anything, will go into repaying that debt. How would they repay my debt? So, forget about earning profit, I may land up with a case of a huge amount of non-performing assets, where the money would never be returned to me. Here comes the conflict. So, now RBI typically in India, which is unlike other central banks, the central banks never had a headache like that, it's the government's headache, some special institutions they can create whose headache it is. But in India, RBI has been typically asked to carry out such developmental activities, where it would instruct commercial banks to do certain things, come out with money and help them out, take this money and give it to the farmers, because they are in touch with the farmers, the ground. So, even if it fails, it is not your money which is failing, not returned. NABARD, the whole creation of NABARD was what? NABARD was a department, it is called the Department of Agriculture and something in RBI until the 60s and 70s. Then it was made autonomous and came to be known as NABARD. And NABARD whole business was to get money from RBI and disperse them as loans to various categories of borrowers, marginal farmers, small farmers, rural artisans, semi-urban area manufacturers, various kinds of, mainly agriculture and rural credit, okay, where often loans were defaulted. NABARD is a separate organization, that was part of RBI, that is the promotional activity they used to carry out, a whole lot through NABARD, but through a department. Those days it was a department. Later it became NABARD, like the Department of Mechanical Engineering one day becomes autonomous and sits outside IIT Kanpur somewhere and is called Center for something. Continue, naam bhi badal diya. The entire mechanical engineering staff has moved there. It has expanded. It gets help from IIT from time to time. Otherwise, it has no connection with IIT. So therefore, the promotional activities are essentially development activities which are non-profit activities, not necessarily you make profit. You can make profit, but not guaranteed at all. The chances are, high chances are that you don't make profit. Now, how to do that? So there, RBI has come up with rules sometimes for commercial banks, where commercial banks suffered a lot also in India. that they would say extend banking facilities to small towns and rural areas. Banks would say, my goodness, small towns, rural areas, उधर में ना है deposit आएगा, हमको head office से out जो lucrative branch है उधर से लाना पड़ेगा. Nor if I give out loans, they would be returned. But RBI would say, no, no, no. To develop banking activities, you have to open branches in small towns and rural areas, compulsorily. Achha. Then, those indigenous banks who are around like Gujarat Shafts and Multans and Chettiars in Tamil Nadu, bring them within the main system. How to do that, I don't know. You do it. Achha. Then they used to do a merging activity, very interesting. All these public sector banks that you see, they were all private banks. In 1969, the most important nationalization program was carried out by Mrs. Indira Gandhi, bank nationalization. Even after that, many of the banks were merged together. Now what you call Bank of Baroda, if you go back into the history, you will find there were 2-3 banks who were merged to create Bank of Baroda. So many times weak banks were merged with the large ones. Why they were merged? Because any bank is dealing with public money. If you say, I now what you call a liquidate this bank, the entire public money would be lost, people's money. You cannot liquidate a bank like liquidating a company. So they were often merged with the stronger ones. Okay. So that was done. Then they created some insurance companies to insure the deposits of the public. Very interesting. Banks were given facilities of an insurance company they created called Deposit Insurance Corporation, DIC. Deposit Insurance Corporation would typically do what? When public deposits come, I don't know, banks were made to pay something so that Deposit Insurance Corporation would insure the deposits on behalf of the people. Then I have already told you, they had this schemes which in details they are available, that this much will be your priority lending. They would issue a guideline to a commercial bank. The total lending in a year that you do, all right, 30% should be priority lending, guidelines for lending. That means what? Suppose 100 crores they lent, 30%, 30 crores will be priority lending. What do you mean by, sir? What is priority lending? Well, priority lending will be, in this state, these are the farmers who should get money and artisans. In that state, those are the small scale industries who should get money from you. All right? They should, on all India basis, should sum up to 30% of your total lending. They would issue guidelines like that. 30% priority lending. You say, no, udhar mein humko rupiya nahi milta hai. I cannot make money there. We don't care whether you make money or not. That has to be there, priority lending. In order to ensure that, they created the nationalization of banks, essentially. Then they can direct the banks to do whatever they want to do, and the banks were doing all whatever they wanted to, but the net result was, till mid-90s, whenever bank balance sheets would come, a newspaper business page, they never had the culture of making profit, running it efficiently. Neither they had the personnel, all right, they became kind of employers, they would hire people, and then their business policies were all under constraint, etc., restrictions, were not performing well. Okay. So they would set up such things, priority lendings, etc., they would always have that, and banks also, remember, they are the main advisor. A commercial bank requires some technical personnel. Where to get them? How to train our people? They always go to RBI for help. I have seen at IIM Lucknow, when I visited once, I remember, a whole team of RBI people have come. You know why that team has come? To get themselves trained, to train financial institutions in India. They are going through a 6 weeks management course, they have these modules. IIM लखनऊ में आए एकदम 20-25 आदमी सुबह में मैं डाइनिंग रूम में गया I saw bulk of the dining tables were all booked. Then I went near and found out RBI. Then I asked this friend of mine, I said, what is going on here? itna RBI people kyun? Oh no, they come, they periodically they come, they have come for training. So these IIM people would train them on certain things, then they would do something for RBI on their behalf and train probably commercial bank people to do what they were to do, and use and give advices and suggestions and whatever, consultancy, maybe consulting. They become a consulting institution for commercial banks. And RBI has been famous with respect to these non-banks that they have received and the funding they have done and refinancing of loans, etc. RBI would directly buy the share capital and set up IDBI. ICICI is a private sector non-bank which was created by the World Bank, but IDBI was created by RBI and Government of India, directly funded. In turn, IDBI has set up SIDBI. When it could stand on its feet, it set up SIDBI. Then you have NABARD, Exim Bank, Industrial Reconstruction Bank of India, a whole range of non-banks. Because of promotional activities, they are very specific jobs. IDBI was meant to develop the heavy and the medium industries. SIDBI was meant to develop the small industries. National Housing Bank, Industrial Reconstruction Bank of India is like a, IRBI is like a hospital for banks, where when hospital for companies, when companies don't do well, it goes to the hospital for cure, medicine. So they study that company, why it's not doing well, etc. In Industrial Reconstruction Bank of India. So it has given various kinds of loans, all right, assistance, and did set up many institutions. Why are these institutions set up in the first place? Because they had very specific role to play in the development of the Indian economy. So these are the promotional and development activities that RBI carries out, which is not the case if you read about the Fed history, what Federal Reserve Bank has been doing. It is doing more traditional orthodox central banking operations. Here it does an operation like a government institution, where government in a socialist system controls and develops things, not a private economy oriented development. And it hasn't created an extra institution, it has given the entire responsibility to the central bank to do it. Very unusual. It doesn't happen everywhere in the world. I will show you the loans, etc., the money that RBI gives, has been given in a data. I'm sorry that it's not that exciting, this part, but you will have to know this. So tomorrow we will meet again.